I give a stock every opportunity to succeed. You have to be patient if you're going to catch these monsters. If you're going to get crazy rich, you're going to have to endure some volatility. I want the best, and you have to be patient.
Hello, everyone, and welcome to another edition of the Traders Mind Chat Show, where we talk to professional traders from around the world to get into their mindsets, their beliefs, what makes them think and what makes them operate and be able to perform at the legendary status to which they perform. And speaking of which, we've got trading legend Jim Roppel with us back on the show. Last time, the title of the show was Profiting from Market Chaos, and look where we are again, like churning through right before the election. Jim, thank you so much for being here, man. It's such a pleasure, such an honor to speak with you.
You should never say things like that. It'll kill my performance. Thank you. I'm super happy to be here. I enjoyed myself a lot last time, and you're right. The timing is pretty crazy. The market's up for grabs. Totally up for grabs.
Yes, well, 100%, man. I'm actually looking forward to. A lot of people have written in with questions already. Well, one of the most common questions that we've been getting is to get your perspective on the current market. Well, with like what, not only the price action, but what happens if one candidate wins over another. We've got Trump, if Trump wins office, if we got Biden winning, if I think Kanye's running as well, like, well, what happens if we get a Kanye West into office?
Well, I think that's less likely than Trump winning the first time. Kanye's a non-starter. I'm just going to write that off. But I think you have to think about what's the market already discounted. And I think clearly the market is overwhelmingly and wrongly expecting Biden to win. If Biden wins, the reason you have to look backwards at 2016. Okay. The market went down 9 days in a row, totally expecting Hillary and a socialist agenda to win. It was considered blasphemy you'd be considered a moron if you thought Trump was going to win, and he did. The market went down 9 days in a row, about 10% into the election, because the market feared Hillary. And the market's gone down, I think, 11 or 12 or 13 days in a row or something like that.
Yeah.
And down about 10%, just like into 16. Now we have 3 days to go. And I think, listen, there's no edge in betting a Biden victory. The market's discounting it, or discounted it largely. If he wins, I think we go sideways to down a little bit. There's no edge in betting Biden. But this is really... I was completely duped in 2016. And I was so angry at myself because I try to be a free thinker. And let's be free thinkers here, okay? Let's skip the polls. I don't know who did the polls. I don't know what their criteria are. But you know what I do know? I'll tell you exactly what I know.
All right.
I want to talk about things I can measure. How about like the size of a rally? Okay. Biden has a rally, and let's just assume that all these people who are Democrats are afraid to leave their house. I think you could get 50 people to show up, 100 people, even if they're petrified, okay? They all equally space. Kamala Harris has an event in an airplane hangar. There's 4 people there. I mean, no one is showing up. No one cares about these people. Let's look at 2016. I was watching Hillary in a gymnasium at a high school over and over again. There'd be 300 people in there, 200 people. Trump has a rally. There's 4,000 people in the arena jammed, and there's 2,000 more overflow outside. It's identical to now, but there's more. Currently, people are sleeping out overnight to go to a Trump event. Just think about that. He's not a rock star. He's a politician. Okay, there was a car parade in Miami for Latin Americans. The police of Miami estimated, just for 1 second, 30,000 people showed up.
And this was what kind of rally?
A car parade where they put flags outside of their.
Oh my God!
Cars showed up.
Can I share a quick story with you for a second? So,
Bring it.
my wife, daughter, and I Oh yeah, last weekend. Well, we go out. We head out east. We're in Long Island, and like New York is typically a Democratic state, right? Like so, we leave the house, we go, we turn on to the Sunrise Highway, like it's a major street by us to head out east toward the wineries. We're in the middle of the Trump car parade.
Okay,
And we're like miles and miles, like from our house to where we ended up going. Well, we were close to like where to the Hamptons, right? So that's like maybe about a 45 minute to an hour drive, what it would normally be, and it's just like everybody's there. Somebody was driving a tank, right? Or like this Jeep that was kind of set up like a tank, like with the bazooka, it was intense, man.
Would you call that enthusiasm?
Yeah,
this is not an isolated event. This is happening all over the country. In California, in Beverly Hills, in Chicago, in just outside Chicago, there was one. There was a boat parade where they told the DNR, we think we're going to get like, whatever they said, a couple hundred boats, and like 1,000 boats showed up.
Right.
There's way more. I was just pheasant hunting up in Wisconsin 10 days ago.
Yeah, I think I saw that video on Twitter.
Oh, maybe, I don't know, but it was 50-1 Trump signs over Biden. 50-1. This is a swing state. It's no chance Biden's going to win there. I was in Florida last week. Overwhelming Trump signs.
So let me ask you this, and this isn't really a political show, but like I'm just kind of curious to get your thought on this. If everything that we're seeing with our eyes is telling us one thing, and then we look at things out like polls, and the polls like show Biden winning by like 10% already, like how does that happen?
They're wrong. They're just wrong. They're wrong. They're looking at poll samples that are wrong. People are afraid to put a Trump sign in their front window because they think someone's going to throw a brick through it. You think they're going to go on and say, yes, I'm going to vote for Trump? They're going to get punched in the face. Use your common sense and just think for yourself. I mean, it's not only that, Biden has no ground game. They're afraid to leave their house. They're not going door to door. Trump's got the biggest ground game going. I mean, it's just, I was in Texas to see my daughter at SMU. Overwhelmingly, Trump. Okay? These, and here's another thing. A lot of these roadside rallies are spontaneous. They're not put together by the Trump organization. They're people doing it on their own.
Interesting.
So, now here's the thing. This is my self-analysis, and I'm biased. I'm a big Trump fan, okay? And a lot of people go, don't talk politics. And I'm like, bull crap. My mentor, Bill O'Neill, taught me everything. I owe it all to him. He talked politics every time I saw him. You talk what you're passionate about. And I am totally passionate about this. Is the Super Bowl for the stock market, guys. This is everything. The market, COVID is kind of back burner just in the next 3 days. It's all about the election. There's no edge in betting Biden. There's a big edge in betting Trump. But in the end,
that's what the market is kind of betting, right?
The futures market is, I think it's wrong. And I almost always assume price to be accurate, but I think there's an edge here. And I have a plan no matter what. If Trump doesn't win, I'm ready. Okay, I'm ready to change gears in a heartbeat. And I'm lighter, way lighter than I was. I was about 130% margin. I'm down to maybe 90% long right now. I've trimmed back. And, tonight was a huge after hours. I'm not even sure I think there were a lot of bad reactions to the numbers. But, if COVID's ramping, I can't see how Amazon's not going to do better in the fourth quarter into Christmas. No one's going to go shopping. So in the end, I want to just clarify. I think the polls are wrong. I think the futures on the parties are wrong. I think Trump's going to win. And if Trump wins, think of this, Biden, he wants to throw sand in the gears. Let's just for 1 second contemplate this. We are in a recovery out of a deep recession, and he wants to raise taxes. Just think for 3 seconds if you're any kind of economist. That's death. And then they're thinking about doing a European style shutdown in a fledgling, burgeoning economy. This is insanity. If he wins, that is throwing sand right in the gears. If Trump wins, and that's what the market's discounting. That's why it's going down right now. just like it did for Hillary. If Trump wins, that's out of the picture. The market can take off and go to new highs.
And so to tie it all back together in this nice, neat little bundle, like what we're seeing is akin to what we were seeing 4 years ago with the market taking a dip when the market thought that we would have Hillary in charge. Trump wins, market takes off. Same scenario, right? Like basically like the same political belief system close to it, right? And it thinks that Biden's going to win. And then like if Trump continues, then we get the same kind of rally that we did in 2016.
It seems too obvious. It's kind of like hiding right in front of you. And you just remember, Ann Coulter was laughed off Bill Maher when Bill Maher asked who's going to win. And she said, right now, Donald Trump. And she was laughed out off the TV show. Right now, everyone thinks Biden is going to win. No, and the market is priced in a Biden win. So, and listen, like I said, follow the trend. You never defy the trend. That is how you blow up. Okay. Every guy who blows up usually has margin involved, doesn't have position size under control, and fights the trend. Those three things are involved in almost every hedge fund blow up.
So let's talk about that. Like for position size and going into this, like how are you managing position size leading in to Tuesday, and what would it be like thereafter?
I'm running probably a lot more risk than I should. The market's below the 50-day moving average, and there's not been a lot of great action. Like normally yesterday, Chewy's tried to break out and it rolled over. Buying breakouts in a downtrend is just, it's death. I mean, it's not death, but it's almost death. So right now I said about 90% long. I think that's too high. I'm kind of leaning into my scenario of the Trump win a little bit, which I shouldn't be.
So 90% long being that like 90% of your positions that you're holding are long, or that you're 90% invested?
90% of equity is long.
Okay.
I have about 10% cash. And I have a few minor hedges on. I hedged off Zoom today. Zoom's been acting funky. And that's, it might be the single leader. It is a stock for the time. Okay. It's really the name. And it's acting, now volume was lighter than normal, but it is 100 points off the high. It's coming down. It may take a run for the 50. And so I managed the drawdown by generally selling deep in the money calls. I sold some calls 100 points in the money before, and I trade around them a little bit. I'm not a very good trader. I think the less you trade, the better off you are. I think Victor Sporandio talked about the alligator trade, where the more you get into it and you try to hedge it, the alligator just grabs you and turns you upside down underwater. So I mean, I'm not a great trader. I'm a sitter. I'm a position holder and a position manager. I try to start my positions, let's not waste time. How often you get a 100% gainer? Once, 3-4 times a year max. If you get one and you only have 10% of your account in it, you made 10%. Who cares? It's almost irrelevant. If you have, so I try to run up to 18% of equity in every idea. Now, if that doubles, I've made 18%. Now that's of value. If I get 3 of them, now I'm up about 60%, back out your losers. Now, you can throw in margin and other things, and maybe you're a better stock picker than me. But if you can knock down, let's just put things in perspective here, okay? Stan Druckenmiller is widely regarded as the GOAT, and he's averaged something around 30% a year, maybe a little more, okay? And I see all these guys, and I'm having a great year. I'm up triple digits, and a lot of people are. That is impossible to continue because liquidity matters. And once you start to kick ass all over the place, you start to manage more money. You cannot, look, if Stan Druckenmiller's the GOAT at 30%, what are all the people listening? What am I? Okay. I can aspire to it, but the expectations are too great. I got way off track. Sorry.
No, that's all good. Like there's a lot of things to dissect just in there, right? Like, so building a position, Right, and that was actually one of the questions that came in before this, and one of the questions that I had too about you start a position, right? Like you don't know which one's going to be the 100% winner or which one's going to be the loser. So how do you scale into it on the way up, and how do you manage it throughout? Let's start there.
Okay, my first trade, I want 10% of equity on the opening position immediately. And so I'm now occasionally, while the order's filling, I'm probably buying a lot of stock. I might back off if it stops going up and see if there's somebody else in there or if I'm the only guy. But I want to build that up to, immediately 10%. And then if it goes up, but before it's up 1.5%, I want to have 18% on. So I'll buy 10%, then I'll buy another 5%, and then another 3%. And I want it all on before I'm up 1.5%. And it depends on the action. If it's lethargic, I may just back off and let it flounder. But if it's
before the position is up 1.5%?
Yes.
So like, let's say you're in a stock and that stock is $100.
Yes.
Right. So if it goes to 101.50, so
maybe 2%, but I want it on. I don't want to. I'm afraid these things are going to get away from me a lot. I'm pretty impulsive on the buying. And that's a key. I am super impulsive to buy only when I know I'm buying the very finest quality and it's acting right. But I give a stock every opportunity to succeed. I'm super patient. And do you remember Green Mountain Coffee?
Yeah, of course.
It started so slowly and lethargically, and it built into this big crescendo. You have to be patient if you're going to catch these monsters. So let's say you get the position on, you have your 18% on, it runs up 20-30%. It's going to pull back down to the 50. You have got to expect all your stocks to pull down to the 50-day 4 to 5 times a year. So if you can't take that drawdown, you have to hedge or sell some. But you never, ever, ever want to dislodge your core position. That's your low-cost stock. And taxes matter in the U.S., okay? Long-term gains are 20% versus 38% short-term. I don't want to pay half my gains to the government. And remember, the average, I just wrote this down for you guys. The average leading stock from 1965 to 2000 or to 1999 ran for 95.31 weeks. How can you capture the big winner if you sell before a year? Listen, the shortest winner in that time frame was National Video, and it was a 33-week winner. It was up 300% in 33 weeks. The biggest winner was Waste Management, was up 1,011% in 222 weeks. So just look at those numbers. How can you kick ass all over the place and capture a 200% gainer if you're selling before? The shortest one in that whole there was 288 stocks in the sample that I counted. I'm sorry, 228 stocks. The average leader of that time frame was running for 95.31 weeks. So if you're selling your stock after 4 weeks, 5 weeks, how many people drink their wine? I'll just tell you, most wine that's bought is consumed within 2 weeks. I let my wine sit for 7, 8, 9, 10, 15 years. I'm in it for the best. I'm in it for the killing. I'm not drinking that stuff. I want the best, and you have to be patient. Did I handle that one up pretty good? Sorry.
Yeah, no, that's great. So what's the I know that you're holding for the longer term, and that's your mindset, but what's the goal, right? When we try to figure out how to best, so we have our destination, right? We're putting our destination into a GPS, and the more clarity that we have on our destination, financial destination, then it's okay, the GPS can reverse engineer how to get us from point A to point B. And for you, like you have, like you've put in your GPS, like how to get from point A to point B, and the route you've taken is to long-term hold, right? Or to be able to hold for that much bigger move. I'm curious, what's that destination that you put into your mental GPS that helped you reverse engineer that this is the route to take versus like a swing trading route or like any other kind of methodology?
I'm an intermediate term trend trader. I know that the average length of the greatest winning stocks in history is 95.31 weeks. And so I know I have to sit. Now I'm trying to obviously make the most amount of money with the least amount of risk. So I manage my position size by, if you have a 20% position that falls gaps down 20% in a day, that's a loss I can deal with. I mean, it's horrible, but I can deal with it. That's about the max I can deal with. So I start there and I try to get on these things. And when they extend greatly over the 50-day, I want to hedge. I don't want to dislodge that stock. I don't want to pay that tax. I might sell 10, 20% of the position, but I'll hedge as much as 50% of it and maybe 60 when it's grossly extended, like the trade desk exploded out a couple of weeks ago and I sold calls 100 points in the money or more. And it was very fortuitous that it worked that way. I did it on Zoom. So I'm trying to sit, not pay taxes, and not get overly risky with my position sizing. I'm trying to manage my risk by keeping that position size on the open to less than 18%, but it's got to count. I want skin in the game. I want to have at least 10, so it matters. You're wasting your time if you're owning less than 10%, if you have less than 10% of your account in something. Who cares if you have a 100% gainer with less than 10% and it goes up 100%? It just doesn't matter.
So hedging by selling calls is something that's new to me, and I if it's new to me, like I imagine like there's other people that are sitting here and it's new to them too. Could you walk us through like what are the mechanics? Like I understand like you have a position and you sell a call, but well, what's the rationale? How are you picking like a strike, an expiration?
Okay, well, right now I wanted to get through the election, and I will want to get into the new year. So that would be my date that I would sell that call. But I would look to sell the strike around or slightly below the 50-day. Wherever the 50-day is. And I don't care if it's 200 points below, okay? And the spread will open up on these deep in the money options. So you put limit orders in and you work them. And another thing I do is when I see these enormous gap ups, these climactic moves, I usually will sell one call of the strike and date that I want to sell a couple hundred of or 1,000, whatever. So I don't have to figure it out beforehand. When I see this climactic action, I can go, oh, I'm already short one of them. I just populate the field and I can start selling those things. I don't have to figure it all out and scroll through, pages of options. But I want to sell the strike somewhere just below recent support, which is generally going to be the 50-day. And like I said, I don't care if it's 30% below current market price. Most people think that's insane, but I'm just trying to protect my butt because I know they're going to the 50. Every stock you have, if you're going to hold it, is going to go to the 50. And this is the holy grail. How do you maximize performance with reducing volatility? And I think Bill O'Neill, as he did an amazing service to everyone by teaching them all these great things and helping people make millions, he didn't talk enough about volatility. Because I think, I don't know this because I never really asked him, but I from my conversations with him, I know his volatility had to be high certainly in his earlier days, less so in his later days. But, just to put it in perspective, I think Bill O'Neill helped more people go from commercial to private jet than anybody else. And that's why I'm just why did Bill talk about politics? Because it's passionate. It's critical to the market. Why did I start Growth Stock Mentor? Because I want to help people. If it was good enough for Bill, it's good enough for me.
So Oh, well, with I want to talk more about the dips to the 50-day and the swings in equity too, and I also want to talk about your new service as well, because like I heard about that. I'm fascinated by it, and I'm sure that everybody here would want to learn about it as well. But like as far as like swings in the equity curve, right? Like so, if you are looking to hold these monsters, like, and you are seeing your P&L, like, well, what's a reasonable expectation to see, like, for a drawdown?
Okay. This is something that I was really bad at for years and years. I mean, decades. I wasn't a boom and buster. I was a boom and buster very early, but after I got my act together, I did have these drawdowns because I'm too optimistic. Almost always, I'm too optimistic. And only in like the last 3, 4, 5 years have I started to hedge with options. I usually would sell the position, but I find that's it's disadvantageous. It's not advantageous because of taxation. The volatility, look, if you're going to have outsized gains, you're going to have outsized volatility. You can mute it and dampen it by selling the calls or trimming or both. But why was Bernie Madoff so successful at scamming people? He gave them the holy grail, 1% a month with no volatility. It's not possible. It's impossible. Okay, if you're going to get crazy rich, you're going to have to endure some volatility. And in the top of my ride the wave plan, it says more money's been lost by trying to reduce volatility than anything else. You just have to accept it and try to mute it and ride with it. But how much more, I don't know what's cost more money to be lost, taxation or loss of, or trying to remove volatility, but they both kill you.
So how did you come to accept volatility?
Well, I used to accept way too much, and I just have a higher risk tolerance than most people. I just do. I mean,
why do you think that is?
Because I don't care about money. I mean, I used to care. I used to care a lot. I used to measure my self-worth on how much I made or how great my day was, or how I'm doing for the year. And I had to put it all behind me, because if you add up that I could buy a beach house and then it pulls back 30%, it's like, my beach house went away. If you're counting it, if money matters too much to you, you're just not, if you're in fear, when money matters to you, you start to be fearful. And fear is the death of a trader. It makes you honor your stops, but never panic. Never sell out of fear. That is just, you're selling for the wrong reason. The stock's not doing anything wrong. It's going down because it's normal. Don't sell. Your beach house is floating away.
So how did money stop mattering as much to you? Like, well, what brought about that shift?
Age. I've been doing this for 33 years, man. I'm old. It's all gray. Time. I mean, and I made some money. Like, I have enough money now. Like, if you're adding it up and what you can do with the money, it's too dear to you. It will cause you to choke off your gains way before they get to where they're supposed to go. You just have to you have to say, look, I'm going to be in this for 20 years, 30 years, monster success. First class to private jet comes over decades. It's not get rich quick. It's get rich quick. It's get rich slowly with discipline over long stretches. Okay. You're going to have bad days. You're going to have disastrous days. You're going to get run over. Anybody out there who's real has been run over. It's a day. If you have good risk management, it's going to get away from you a couple days a year, and there's going to be a few bad ones. My daughter's like, hey, Dad, would you trade 3 horrific days a year for epic performance? I'm like, yes, I'm all in on that. She's like, then just relax. My daughter's brilliant at 19.
That's great. That's great. That's amazing perspective.
She's a smart girl.
Absolutely. Just like Daddy.
No, she's way more insightful, way smarter than me. I think she will, if she wants to pursue it, will make an exceptional trader.
Mm. So, uh, yeah, like let's let's talk about the growth stock mentor. So, tell us a little bit about the service that you had. That like, how did this even come about?
Um, I did a couple podcasts. People like you asked me, and I just did them. And then Adam Sarhan called me and said, "Hey, Jim, let's do this and make it a pay service." And I did get some commentary about, "Hey, why are you charging? You have enough money." And I'll tell you why. People always would see me in restaurants or whatever, and they go, "Hey, would you teach me to trade?" I'm like, "Absolutely." And I bought a huge stack of O'Neill's books, and I'd
Okay.
give people the book. And I'd see them a month later. I go, "Hey, did you read the book?" They go, "Oh, it's in the trunk of my car."
Mm.
They had no skin in the game. If you don't have skin in the game, you're not going to run. You're not a serious player. Okay. Why are hedge funds way better than stockbrokers or financial advisors? Because financial advisors have zero skin in the game. All of the greatest traders, you don't find them in brokerage firms, giving you a wrap account at 1.5% a year. They're all running funds. You have a hedge, never, ever, ever get involved with a hedge fund where the manager doesn't own 20% of the whole thing. He's in there right with you. Okay. He's the cook, he's eating the food he's sending out to the dining room, he's eating it himself. We're together, that you're aligned goals when you have skin in the game. And I'll just tell you something else. Bill O'Neill gave to the public. Like I said, he helped more people gentrify. I mean, not more than capitalism, but Bill helped people understand how capitalism worked and was the golden goose of prosperity. And Bill told many people that, and if it's good enough for Bill, it's good enough for me. I'm going to give all the money away. I don't care how much it is. I mean, I'll give every nickel of it away. But I want the people who are watching to be real, to take ownership of their trades, to cut their losses, and to have skin in the game. I mean, we'll give some candy out at the end of this. We'll give a couple stock ideas and everything. But growth stock mentors, I will give ideas, but I want to give them the fishing pole. Bill O'Neill gave me the fishing pole. I would talk to him a lot, frequently, and I only wanted his rules. I wanted his thoughts on controlling emotions and I didn't want his stock picks. I wanted the fishing pole. And that's, Growth Stock Mentor is about helping people go from first class to private jet. Or I have another guy, one of my daughter's teachers at a prep school started with $1,000. He made $13,000 in the last 2 years. If I can do that, I love it. And any kid under 18, I'll give it to them for free. But if you're older, be serious about it. Pay the $100 or whatever it is. I'm giving all the money away.
That's amazing. That's amazing. So, like, what are you doing inside are they getting weekly webinar session? What exactly is it?
I initially started it once a month, but people wanted more content. So I tried to do 3 to 4 times a month, maybe once a week, maybe every other week. Or if there's a big event, Adam, I'll just jump on and give commentary. I review my Ride the Wave plan from my work on Sunday night, which is my deep dive where I cover hundreds and hundreds of stocks. And, I cover everything from sector to leaders to action of the leaders to trend of the general market, what the variables are to look for, the template for the best stocks ever, what fits the template today, what I'm thinking about the market when I'm wrong. When I choke, I flat out say I bungled it. I want it to be real.
I'm glad that you brought up template for the best stocks ever. Like that was actually one of the questions that we had before too. Like, well, what is your template? Like, well, what are you scanning for? And like, well, what would be like the design of like, this is what an ideal stock per Jim?
Well, it's not per Jim. It's per statistical facts over 100 years of research. It's not my opinion. It's deciphering the greatest leaders in history and distilling them down to the common variables they all had. And I'll just run you through them, and we'll look at, because Zoom is so obvious, we'll do Zoom.
Amazing. Yeah. Everybody take out I've got my notepad and I've got my pen. Start writing.
This is not magic, and this is well written. Okay, this is well documented things. Here's the thing. The greatest system in the world, most people will fail with because they won't follow it consistently for decades. But I'll give you the template. It's simple. Earnings growth, sales growth, pre-tax margin, after-tax margin, return on equity, earnings beat, earnings estimates, beat and raise quarters, group strength, and relative strength might be the most important of them all. If you find a stock, and then the composite rating, it's like shocker. Zoom's composite rating is 99 out of 1 out of 9 out of 0, 1 to 99. It's the highest. Why buy anything that doesn't have a composite rating of 90 or better? You can buy anything. Why would you buy a Vega when you could buy a Ferrari? It's just stupid. I mean, it's right here. In this template, Bill spelled out this template 40 years ago. It's not a secret, but most people can't do it because they don't have the discipline to sit and implement all those variables of pre-tax, after-tax, ROE, sales growth, earnings growth. I want to see 40% or better on all of them. Now, sometimes you screen and there's just none out there. There are always a few gems, and I'm always looking for the gems. I'm really only interested in 10 or 15 stocks in the whole market, maybe a few more, but the relative strength, why buy anything that is not 95 or better unless you figured out something that the market hasn't. If it has a prior uptrend, the relative strength is going to be in the 85, 90, 95, 99 zone. Okay. Group strength, it's just imperative. You want wind in your sails. Okay. If the group is red hot, I don't want to buy any pieces of crap, but you could buy a piece of crap in a great group and make money. But I want to buy the elite in the group. And, we're going to go over we're going to give the candy at the end, but buying great stocks like right now, I have some ideas, but they're not a lot of great setups. So if you puked all your stock a couple weeks ago and you were brilliant, you sold the top, how are you going to get back in? Were you going to jump in on a 2 weeks tight? You're going to start an 18% position on a 2 weeks tight that's like a 70% chance to fail. You've got to hold through short-term pullbacks, and just all of them. Now, when they turn into intermediate term, you have to become much more defensive and maybe go to 50% cash or something. And then,
how would you define the difference between a short-term pullback versus an intermediate term?
Well, how far below the 50-day are the indexes? Are all the indexes below it, or is it just the NASDAQ, or is it the Russell? How far below it? How are the leaders acting? Are the leaders getting run over? How much are you up on the position? If you're getting out of everything, you're only up. If you're always getting in and getting out, you're never up more than 10, 15, 20%. So you're always at risk of being stopped out constantly. But if you're sitting on ServiceNow for 2.5 years, you're up a couple 100%. I can sit through I won't sit through anything, but I can sit through a lot. And now there's been some bad markets over that 2 years, but I was hedged. I'll hedge off. And I sat through the whole, C19 disaster with Teldoc, Zoom, and ServiceNow. I reduced the positions and I hedged a lot, and I went extreme and I actually bought some puts, but I held them. If you're getting in and getting out all the time, you're paying taxes up the butt, double the taxes that most people you can pay if you hold for the long term. And you're always on razor's edge. I'll just tell you, when I was building the house I live in, I told my dad, I want to put a glass window in the shower with a ledge so I can put my laptop up there where it won't get wet and steamy and I can see the quotes. And my dad's like, have you lost your mind? Do you want to live like where you can't step away to take a shower in the middle of the day? You want to live on the razor's edge? Like, that's no life. I don't want to live like that. I want to get rich, and I don't want to pay a lot of tax. I want to sit. And here's the other thing. All of the people, that's not true. Not all of them, but most of the people who I know have made killings have sat for long periods of time in monsters. and I don't know how they've managed them, but the great wealth in the world is created by sitting.
Very interesting stuff. A lot of gold in there. I can't wait to go back and rewatch this and take notes. Well, I actually had somebody write in and say that they turned the last interview into like a transcript and a mini ebook for themselves. If you can believe that, like that, this is gold.
I'm not telling you anything that Bill O'Neill hasn't documented in the Bible. 3 books: Reminiscences, Darvis's book, and Bill's book. I mean, it's all in there. I mean, not all. The psychology part is not, but that's such an honor and a compliment that that person said that. I'm a knockoff artist, okay? The Japanese had it right. Copy the Americans. Why invent anything? Bill, you can guess how much Bill O'Neill might have amassed over his life. Would that be okay for you?
Yeah.
Copy him. Copy him. It's all there. It's not a secret.
It's our job, I feel, to like nothing needs to be created from scratch, but we're all like learning, growing, and evolving, and like making this stuff our own, right? Like, one of the biggest mistakes that I feel that I made when I first started out, like I was trying to be exactly like Bill to the letter, and it wasn't until that I finally learned that like you could take this as a methodology and be yourself with it. So model success versus trying to clone success, that for me, like that was a major turning point.
I think there's interpretations of Bill's method, and I think Bill adapted over the years to having from get rich to stay rich, and I think his risk tolerance came down over the decades. I'm very confident in that, but the basic tenets don't change. The basic stock selection criteria are identical. Okay. You wanna, once you get that, I mean, any jackass can scream for this stuff. Okay. The critical part is, who are you and what's your mental makeup and why do you do what you do? That's the thing that Bill didn't really talk about publicly. That's where you go from average to exceptional. If you don't know who you are and why you're doing what you're doing and what drives you, the market's going to show you very quickly. The market is here to, it's like water seeks its level. The market is here to just uncover your frailties. Are you impulsive? Are you, not managing, whatever your shortcoming is, the market will expose you very, very quickly. If you don't handle it, you're going to be out of the game very quickly.
Yeah, the market is a great teacher, maybe the greatest teacher.
It's the greatest teacher to tell you who you are. If you're open and honest with yourself and you evaluate yourself, you learn, wow, I'm not good at, whatever. I'm too optimistic. I'm too pessimistic. Yeah. And this is really, it's very difficult to be a brain surgeon or to be great at any one thing. But to be great at 2, this is really like a full-time job. It not like, it is. People can do it, but you've got to engage fully. Okay. Yeah. If you're not, find a great manager and let them run it, but make sure they have skin in the game. Anybody can do this, but you have to be willing to put in efforts that no one else will. Otherwise, everyone would do it. Think about that level of effort that it's going to take.
Yeah, absolutely. Like you need to approach this game like it's a profession. That it's not just like, I'm going to do this once a week for an hour. No, like you have to have a love for the game. You have to have a passion for this, because you're going to get kicked in the face again and again and again. And like, who the hell likes getting kicked in the face? Like you have to love the thing, right? Like, what kind of a masochist are you if you don't?
But it's part of the game. Nobody who's really made a lot of money over time they've all been obliterated many, many times. And you listen to the Paul Tudor Jones will tell you. And Paul Tudor Jones's mentor was killed at times. Just, you have to stay. It's just an inning. This whole thing we're in right now, if you missed it, you didn't miss anything. It's just one inning. Okay, I'm 55.
Yes.
I believe I'll live to 100. I have 45 years of 5 to 10 true market leaders every year. Okay, I'm going to look at 250 true market leaders before I die. Probably I'll see 10 to 15 whole market cycles. So if you're hearing this for the very first time, you haven't missed anything. It's all in I saw this show, The Greatest Restaurant in the World's in Italy, and they interviewed the chef and his wife, and the wife had this shirt on. It was a Gucci shirt, and it says, "What are we going to do with all this time?" And it really resonated with me. Look at all the time in front of us and all the opportunity, the innovation in America, the golden goose of capitalism and free markets is nothing has gentrified the world globally like this. And a vote for Biden is a vote for the opposite of that. A vote for Biden is a vote for throwing sand in the gears and killing the golden goose that gives all the gifts of prosperity and innovation. And, how far off topic am I?
It's all good. It's topical. We've got the election day around the corner. I think that, it's all good. It's all good.
Dude, you fire me up. I kind of get off. I get off the rails with any interviewer who ropes me in, but with you, I kind of get a little crazier.
Oh man, that actually had. Why don't we take some questions from the audience?
Bring it. Let's do it.
All right. Here's a good one that came in from Frank. Frank wants to know what would you tell your 30-year-old self? So like going back in time, like it's kind of like on topic with what you were just saying, right? Like what would you tell your earlier self?
I think about this a lot because I remember sitting in a Chinese restaurant when I was broke as a joke with this other guy who was ravenous about the market, and we were looking at all these stocks. This is 30 years ago. I'm 55, almost 25. The opportunities you are going to see are going to be life-changing, and all of them capturable. If you are patient and save your money and invest it and compound it out, you're going to get silly rich. And God forbid you could know what I know at 30 years old. If I would knew what I knew today at 30, I can't even understand how successful I would have been. But I had to learn over, getting kicked in the face and losing money forever before I figured it out.
What do you think 30-year-old Jim would have needed to hear to be able to accept this knowledge?
Here's one other thing. I don't know if I would have endeavored to do it if I would have known the statistical probabilities and what I would have had to have gone through with all of the losses and the gut-wrenching pain and the statistical probability right off the bat. You're going to be wrong on 6 or 7 of the stocks you buy. You're going to lose right off the bat. You're going to be underwater most of the time in your P&L. And you're going to have to do it for decades to get rich. And you're going to have to spend most of your waking hours doing it. It's not easy. If I would have known, you have to do it because you love it. You can't do what I just said if you're not insanely passionate about it. Like, I've only been sleeping about 4 hours a night lately because I'm so fired up about the Super Bowl of everything and the election and this market. I need a break, and hopefully after the election, the market will settle out and it'll only be about COVID. If I was 30, I would say, go for it. The opportunity is enormous. The innovation you're going to see you can't even understand how unbelievable. Imagine telling somebody who's lighting like a cast iron stove Down the road, there's going to be this box and you put something in it, you hit a button and it magically heats up. Or you're going to, you know that can you have strung from your house to my house with a string on it? Well, we're just going to talk into a piece of plastic and you can talk to someone in Russia with no wires. Like, you're going to see things like that in the future that we can't even comprehend. And they're going to need money. They're going to go public. It's going to make a perfect base. It's going to break out. It's going to have the perfect template, the sales growth, earnings growth, pre-tax, after-tax, all that crap. It's going to happen over and over and over and over and over again. It's never going to stop unless you kill the golden goose of capitalism.
Like even like this, right? Like go back 20 years. I'm just graduating high school. I'm starting college. Like, yeah, you're going to be able to talk and see somebody like by video and be able to speak to people around the world.
How about Zoom? Right? How about Zoom? It's like, imagine you have a computer and you're doing like a spreadsheet on it. And somebody says, you know, someday you're going to consider that computer to be the dumbest thing in the world and it's not connected to a million other computers. And then you're going to be able to surf the web and, you know, college education will be irrelevant. It won't be just for the rich. It'll be for everybody because you can get it online for free. Like the level of innovation that is going to occur is only ramping. It's not linear. It's going like this. The gentrification of the population, the free markets are gentrifying the poor at an exceptional rate. And their free markets are killing despots, scumbags, dictators, every really bad guy who's trying to control people and rape them for their country's natural resources. They hate capitalism because people can see what's possible and they're forced to accept what other people are getting. And then they get overthrown. Despots, scumbags, these assholes like in the Middle East and these communists who are killing their own people and things, they hate capitalism. Capitalism is it breaks the chains of poverty. And it's crystal clear that this is a fact. Look at any socialist country in the world. It's a shithole. Capitalist countries dominate in every area. And the guiding light in the world for freedom and safety and prosperity is the United States. I'm channeling my inner Bill.
Oh man, I would have loved to have been on a fly on a wall to like hear him speak live and in person. Like I've seen, like I've spoken with Scott. Like I've spoken with Mike and Charles and like the rest of the IBD team. Never met Bill.
When Bill was kind of pseudo campaigning for a president, he had a special meeting in Ohio because it's a swing state, and I went and saw him. And then the next day I went to the airport and I'm walking to my plane and I see Bill with his security dudes, and I see him and I'm like, oh, I gotta talk to him. And I start to go over to the security guy's like, no, you can't talk to him. And Bill goes, come over and talk to me. So I got to sit with Bill waiting for his plane for an hour and 40 minutes. And I just took massive notes on the whole thing. It just was one of the greatest things in the world. I should really quantify all that and sharpen it up and tell people what he said. It was awesome.
I know that, well, we kind of have a tighter timeline today. Like we're coming on close to an hour. And I know that you wanted to give like 5 of the ideas that you're focused on. So I want to make sure that we get to that. And if we have any flexibility in the time, let me know and
right.
We'll
okay. So let's give them the candy. All right. Let's just, I mean, you know, this is what everybody wants, but I will do it, but I hate doing it. It's way better for people to screen for their own ideas, learn how to handle them. But let's just throw the candy out. It's Halloween.
Yeah, right.
So I'm very intrigued with the change in the market to social media. And I think the new emerging leader is Snap. So pull up Snap real quick. And, you know, right off the bat, the group is 23, but this gap out that Snap had, it broke out on 36 million shares. And
would you like to share your screen?
I can't. I don't have Wanda up on this laptop. I have Wanda over here.
Okay.
Next time we'll do that for sure.
Like, I can pull it up on MarketSmith.
Perfect. Let's do that.
All right. Let me just fire up MarketSmith real quick. Thankfully, this computer is pretty fast. Screen number 5. I always feel inadequate too. I only have 6 screens.
Do you have screen envy?
Yeah, I have screen envy. So okay. There's my. So well, what did we say? Snap.
Yeah, and on 10/21, go to a daily, please.
Okay.
So 10/21, Snap breaks out on a blowout earnings report on 254 million shares. Normal's 24 million. Like, that's just an explosion. An ocean of buying comes charging into this thing. Mm-hmm. And the earnings were 105% over normal. Sales growth was 52%. Up to down volume. Throw that in the matrix of things for TMLs. Up to down volumes 2.3. Relative strength is 98, and the stock blows out from 28 to 44. And then what is it? Well, and then it goes up, the next 2 days, and it's been holding fairly well. Now, also, you got to understand, this occurred in one of the crummiest markets we've seen in a long, long time. I normally do not want to buy stocks when the market's below the 50. Now, it wasn't below the 50 when this one came out, but this one hasn't blown up yet. It's this. If this market straightens out, say for whatever reason, Trump wins, doesn't win, if the index starts to move up again and this thing holds up, this is probably your new leader.
Yeah.
Also, pins, PINS.
All the social media platforms that I don't use, which is interesting.
I love Twitter, and Twitter's getting killed, I think, in after hours.
Is it really?
I thought it was down like 9 points or something. I'm not watching, but I love Twitter. But here's the thing, my opinion, the market doesn't care. That's why relative strength is the dominant trait to lead you to these monsters. Now, pins ripped out today. Now, I don't love the close. It's kind of low in the range, but it's not dead by any stretch.
Yeah, no, not at all.
Pins was acting beautifully before this explosion out. And Pins is a perfect example of why don't ever let anybody tell you, because the stock is extended, that it can't gap out. Like, people are like, oh, I have to sell before earnings because it's extended. Bullcrap. Look at this, okay? By the way, the way to kill it in a stock is to sit through 6 earnings beats. How long is that? It's a year and a half. How can you be, if you're going to sell before every earnings report, how can you sit for 95.31 weeks? It's impossible. So anyway, today the thing trades, only 126 million shares and normal's 18. Relative strength is 99. They beat earnings by 225% on a 58% sales increase. Institutions have gone from 684 to 744 in the last quarter. It's just it's a month. Estimates next year, only 700%. It's not that big of a deal.
Yeah, no, it should be 800.
Yeah, if it's not 800, I'm not interested. Social media is your new area that's emerged just recently, but these are
it makes total sense to me that social media would be the spot, and not like Pinterest too. Like, even though, like I mentioned that I'm not on it, like if we're in an environment where people are building their own businesses, working from home, and like the whole like idea of Etsy, right? Like, I feel like this goes along with Etsy, where people would start to be putting out those kinds of like things that they're making, tchotchkes, and then like advertising through Pinterest.
I think that Pinterest shows people how to decorate their house and has the things they can just click on it and buy it. It's it's not. I don't go on it at all, but I basically understand the concept. So social media is probably your new leading area. I also like Livongo a lot.
Livongo, what VGO, right?
LVGO. So
why Livongo?
Well, it has a wonderful prior uptrend. Relative strength is 99. They reported earnings, Teladoc reported earnings last night, and for some reason, Wanda screwed up. They had a very nice beat. They didn't quite guide high enough or something, and so it didn't break out. And this is kind of a problem with the general market right now. Earnings have been hit or miss. It's not been a home run. So this is a base that's kind of tightening up. It has, on a weekly, it has some very nice bars of blue. It's been digesting. It is a little looser than I'd like. I'd like it to tighten up, but the Columbia Acorn Fund has taken a position. Its earnings growth, 633% last quarter on 126% sales growth. Composite rating 98. I don't see anybody wanting to go to a doctor's office in the near future with very sick people in there. I think this is kind of here to stay. I think the digital world, the stay at home, work at home digital world is here to stay. It's not going away. Even I think how about this? When everyone goes, I don't think everyone's all going back to work, but no matter what, I don't want to have to get dressed and go to a doctor's office. Yeah. I don't want to drive my car to the gas station and put gas in it. I want to plug it in my garage. I want convenience. It's way easier to use Livongo.
Whatever is going to save us time. Here, a question came in about Omer. Hope I said your name right. Was asking, Livongo is merging with Teladoc.
Yes.
Is that?
Yes, it is.
All right.
So I like Teladoc. I like Datadog. Now, it has weakened from when I bought it, and I actually have trimmed a lot. Datadog has become one of my smallest positions. But it's really possibly giving you a great opportunity to buy it here on the 50. And look at the wall of blue. 1, 2, 3, 4, 5, 6 weeks in a row up. And then it's pulled back on lighter volume. Okay. Relative strength is 96. If you're working from home, the potential to be hacked is gone way up. Now, these guys protect you, internet security for working from home. Last quarter, they beat earnings by 400% on a 68% sales increase, 350% earnings growth. Relative strength is 96, and it has been coming down. I don't love that. Composite rating 98. Group strength out of 199 groups, it's the 8th best. Okay, so you've really got the wind in your sails here. Contra Fund has taken a position. I like Datadog at the 50 or around the 50 if the general market gets back above its 50-day moving average. I like.
So where would you? So then it's right at the 50 there. Like, so would you be entering it like above like some kind of like a daily resistance level like this, above like a moving average? Or you like, how would you look to get in if you were to start something here?
I'm not really proficient at buying it at 50-day moving averages, and I honestly don't think many people are. It's a messy affair. Stocks don't go down, kiss it, and then just go straight up. If they do, you know you've got evidence of a true monster. It does happen, but it's rare. Usually they kiss it, undercut it, they whip back and forth above and below it. So you might have to work your position around this. You might establish it, trim some, add some back. You might have to work with it for a week or a month before it comes out of here. Now, I wouldn't do any of that until the NASDAQ gets back above its 50 and gets healthy. And, even if the NASDAQ gets above the 50 for a day, it doesn't mean that's going to be a messy affair also. It's going to take time and patience and working the position. So I would try to buy it coming back up through the 50 or kissing it. And you might have to try it multiple times before you get it right. And you might not get it right. It might just whip you out and take off without you. Not going to be easy. But if it was easy, everybody'd be in a private jet. So I love Datadog. I love the fundamentals. I like ServiceNow, which I've held for 2 years. Now, let me be super transparent. I have a big position in it right now. I've not held that whole position for 2 years. I held a small core of it, but
So 2 years. So somewhere like back in here.
I think I probably owned it at 200. It just came
Okay. So like, yeah, like, so somewhere like in this, like as it's breaking out there.
exactly. That's when I started the position. And then
Okay.
I traded around it a lot, but I just believe in this company. I mean, they're the roots of the digital future for corporations. I mean, this is no small company. This market cap is almost it's almost $100 billion. It's the real deal. Here, composite rating 99, relative strength 93. They only beat by 17.5%. But this word's a little gauche, but I'm a whore for liquidity. I'm running way over $100 million. I need liquidity. There's only about 200 stocks I can even look at because of liquidity. This has it. This is one of the reasons I don't love IPOs, but we can skip all that. Estimates, this is such a stable company. Earnings growth, 33%. Estimates for this year, 24 next year. The pre-tax margins, 23%. Return on equities, 39.9%. Sales growth, 30%. The combination of extremely high liquidity and numbers like that make this elite rare. Normally when a company gets to this size, they cannot put out numbers like that. Mm-hmm. This is a stock that is kind of like a must hold for any major fund. And specifically, who does own it? Fidelity Contra, Fidelity Magellan, Fidelity OTC had a position. They're maxed. I can't see the growth in funds, but this thing kissed the 50-day in fear yesterday, and it did come ripping out of there. Today volume was up 113% on a nice move away from there. I mean, look at the volume, the daily, and look at the volume bar today.
Yeah.
Look at today's volume bar. That's moving away from the 50-day. Now, if I didn't have as much as I do, and if the market was above the 50, I would have added today just on that exceptional move off. So I love now, and then I got to give credit to my buddy, Cubby Bears, my golfing buddy, NET. Look at what NET did. It explodes out of this base without a handle, which I generally don't like. And you could even almost say wedgie, but it broke out on 28 million shares when volume is normally 5.8 million. Its current relative strength is 98. 2 Fidelity funds have just started positions. It's in cutting edge technology, the edge computing and security. Their last earnings report, they beat by 50%. The quarterly number was 86% up above the prior quarter on a 48% sales growth. This thing's just a monster. It gapped out. It's digesting very nicely. And I think it's probably going to come down to the 21-day. It's acting very, very nice. And then I like TTD, which I own a lot of these names I'm discussing. So TTD, okay.
I love that we're looking at the same kinds of stocks. Like I flag all the stocks that I'm in, and like so far, like we're looking at the same stuff.
This thing, it just last quarter they beat earnings by 411%, as if that's just no big deal. I mean, it's how hard it is to beat earnings by that much. Relative strength is 97, composite rating 96. I don't love they've had a slump, and that's because of some unusual occurrences with COVID, I think. But this stock is clearly in gear. It's holding the 600 level really well. It's extended, needs to digest a little bit, but I love this thing. I've held this in my personal account for a couple of years. So there's the candy, and I just want to throw one last stat out.
Okay.
In the study of the greatest winning stocks in history that I personally did, there was 228 names. Guess how many stocks from 1965 to 1999 were repeat in that group of 228?
I have no idea.
7. So if you have a monster leader that tops badly, it has a 2.7% chance of being a reoccurring true market leader. So
wow.
Once they have their 95.31 weeks, they're generally cooked. And Mr. Big, I'll take one or two more questions, but I probably should roll.
All right. Then I'm curious about ServiceNow, right? Like you said that you got in over here. If you're in over here at about 200, right over here, it's at 300. You're at a 50% gain. How do you hold through this? That brings you back to like that low there. That's 13.99, right? So like that's giving back like almost the entire thing. Like how do you hold through that and say, you know what, well, like it's cool, I'm fine. Like even if you're scaling out.
I trimmed I trimmed the position, like maybe sold half of it, and I hedged off the rest of it. Like when the market gets, when a stock starts living below the 50-day, you've got to understand what they're doing and really and believe in it deeply. But again, I'm not willing to take a drawdown like that. I trimmed off a great deal of the stock and I'd hedged a lot of it, just like I did in the COVID panic.
Where would you have exited the last bit of it?
Probably the dead low. No, I don't know about that.
Like break even, I guess, or
no, I was out of it before that for sure. Breaking the 50-day for me and living below it on a Friday close or multiple weeks below, or getting resistance banging back up underneath it, is a real signal that a much more intermediate term correction's underway. And I'm just not going to sit tight through that at all. Like I might have trimmed 50% of the position and hedged off and a lot of the rest. And I did the exact same thing in March of this year.
Yeah, like I look at that and like man, like I that would be yeah, like I know that I couldn't do it. Like I think that you're the only person that I've met that can.
Optimists prevail. Optimists always win out in the end. You name one guy who's an uber pessimist who's running a super successful hedge fund, or who's been an innovator in anything and kicked ass all over the place. Okay, the pessimists are all like living in their parents' basement smoking weed. Okay, I can't get a job because the world hates me and I'm a victim. Optimists prevail, dude. You've got to understand what it is the company does and believe in its future, and that it's gonna expand market. You have to intimately know the fundamentals of a stock you're going to try and hold for 2 years. Otherwise, you're fooling yourself. You'll get shaken out and forget a bad, horrible pullback like those two.
I think that's key. I think that's key. And that you reiterated right there, and you said it earlier, and I just wanted to point it out. Like you're going in with the mindset that like I'm buying this and I'm intending to hold this for that 93 weeks, that 2 years. So like from here, it's February 1st, 2019. Over here, it's October 2019, and you already have the mindset that like this has the potential to be a monster stock. So that's what's giving you the cojones to, right? Like,
yeah, I mean,
like if that wasn't part of the plan, like
the stock was so consistent with earnings. Their earnings just barreled right through that. They didn't stop laying down monster quarters. It's a juggernaut. This company's unique. It's not like I think Peloton, I have a Peloton and it's almost a clothesline in my basement. I think I've gained a few pounds since I bought the thing.
oh my goodness.
I don't have the confidence in Peloton that I have in this. Now, maybe somebody's uncovered some information about Peloton that I don't know, but it doesn't really matter. I don't have the confidence. I can't sit with it. You've got to intimately understand and believe in consistent earnings growth, just quarter after quarter, and not missing can instill an awful lot of confidence in somebody. You guys, this is the digital future of corporations. These guys aren't going anywhere. They're only going to expand. The world's changed totally. The guy was interviewed this morning on CNBC. He needs to take off his dark sunglasses when he talks to the public. But look, he can do whatever he wants. He's probably a multi-billionaire and he's killing it for me. So I love the guy. Well, he's new, by the way. But anyway.
Jim, this is amazing. We're already 15 minutes over. I know that you've got other things that you're doing today. So I really want to say, like, well, what a blessing it is to have you here with us, man. Thank you so much.
Dude, thank you for inviting me. Everybody take a look at Growth Stock Mentor. 2 weeks free. I'm going to give all the money that I make from it away. And I'm going to give it all to the Evans Scholars. Evans Scholars rocks.
That's awesome. No, what a beautiful thing. Thank you so much, Jim. Really appreciate it. Everybody that's here.
Wait a minute. Hold on.
Oh, wait.
I have closing remarks.
Yes.
All right. The futures market on the election, I think, is wrong. Never, ever give up. You haven't missed anything. It's just one at bat. Like I said, I'm going to live, I think, for 45 more years. I'm going to see 225 more true market leaders, 10 to 15 major market cycles. As long as we keep socialism at bay, the golden goose that keeps giving the gifts of innovation, global gentrification and freedom, liberation from dictators and scumbags and oppressors and despots, will go on. If we kill the golden goose of capitalism and free markets, you can forget about all that crap and we'll be like Venezuela or Europe for that matter. I like America just the way it is. It's the beacon of freedom and prosperity for a reason. America's number one. Vote Trump. That's it, man. I'm out. Thank you.
Thank you so much, Jim. Have a great rest of the day. Thank you, everybody, for being here with us today. Amazing stuff. Can't wait to get this onto YouTube. I plan on having it posted early tomorrow.
One last thing. If you take what I say seriously and Trump doesn't win, you better have a plan for this shit show. The trend is always right. Okay, I'm really out now. Have a great day. Thank you.
Amazing, Jim. Thanks again.
Take care. Bye.
Bye.